Hello and welcome. You're watching NEWSX. I'm Rishabh Gulati. The ability to transact goods and services at a fair value is the root of the economy. It's the root of development. Now, there was a time, and my generation is thankfully the last to remember it, when simply making an interstate phone call, or even tougher, an international call, required you to pre-book a slot by calling an operator, giving a number and paying hundreds of rupees per minute, most of which were utilized saying, hello, awaaz aa rahi hai? Now, today, we take the ability to make these group video calls like the one I'm about to use right now for granted. Although, can you hear me, please unmute yourself is still a common phrase I'm sure all of you have experienced. In this, the biggest opportunity for India's economic growth is now inclusion economics. All you need to do is include people into banking, e-commerce, insurance, lending, transaction services, and that very simple fact can help drive growth. This all has to run on financial inclusivity. Many years ago, financial inclusivity could only happen by literally turning the Indian postal system into a banking service. Today, the best in technology and investment is coming from abroad, with the biggest players innovating in the Indian market and roaring entrepreneurs creating unicorns back home. But away from valuation headlines, the real mission is to ensure every single Indian has access to financial services. Out of 1.3 billion of us, only around 60 million have credit cards, but 800 plus million now have access to debit cards. We are doing 6 lakh crores phone-to-phone UPI transactions a month. About 170 million people who never had a bank account in rural areas now have one. And while our data rates are no longer the cheapest in the world, it's a very reasonable 6 cents a GB compared to $4 in advanced economies. All the microcredit schemes, meanwhile, tell us that empowering women has the best financial and developmental results. We have access to the best brains, and the AI machine learning future is just beginning. The goal is simple: how to use the best of technology to ensure that every single Indian can have access to financial services, be protected from fraud in a quick and easy manner. What's required in practice and policy to get there? Get there fast. Let's have that conversation. We have with us some of the leading international players who are investing heavily into creating that ecosystem in India, and some of the most amazing fintech firms doing brilliant innovation across the value chain. My thanks to the team at ASSOCHAM for putting all of this together. Joining us on the broadcast, we have Shri Govindarajan. He is CEO and co-founder of Perfios. Shri Rakkappan, who's head of government regulatory engagement in India and South Asia for Visa. Ms. Richa Mukherjee, who's co-chairperson of the ASSOCHAM FinTech Council and is a director at PayU India. And Shri Ravi Aurora, who's executive director of global policy affairs and community relations at Mastercard. Welcome to all of you, and thank you for joining us on this telecast. If I can just quickly, Ms. Mukherjee, begin with you so you can help us set up this conversation, ma'am. In the end, we're talking about financial inclusion. What does that actually mean? What is this emerging fintech environment which we've seen developments happen so rapidly over the past 4 or 5 years? And what should the goals of financial inclusiveness mean, ma'am?
And to all my co-panelists, I want to thank NEWSX for inviting me on this relevant panel discussion on fintech, which I believe we are all part of it and contributing in our small way in one way or another. Coming to your question, I'll divide it into 2 parts. First, I'll talk about the fintech landscape, how it has evolved over the last 5 years. India is definitely moving towards a cashless economy, and it's making transactions easier, faster, and simpler. Since last 5 years or so, we have seen India seeing a sharp rise in the number of fintechs. Of about 2,100 plus fintechs that exist in India today, about 70% have been set up in last 5 years. And India continues to be ranked among top 5 fintech investment destinations. And therefore, recent years, we have seen impressive investment flows into fintechs. This has all culminated into a very high number of unicorns in the country, which is estimated to be around 100, as put up by the recent RBI address. The number is debatable, but that is as per the latest from the RBI figures. So that makes the total valuation of India's fintech industry about USD 60 billion, which establishes its credentials as a large, vibrant fintech ecosystem. Also, I would to say that COVID-19 has, of course, accelerated the pace of digitization across categories. Payments, moving over from payments such as alternate payment methods like BNPL, lending, wealth tech, insurtech, and there has been a sustainable behavior change towards digital offerings in financial space. If I just briefly talk about some of the factors that has enabled the success for this fintech industry, it is the, the funding access to in the fintech sector, positive regulatory support, technology talent, which is via our natural inclination to the STEM, science, technology, engineering, and medicine, and financial institutions and fintech collaboration, and not to forget the mention of significant changes in the customer demand, consumer demand. It has been changing in a sustainable way.
Okay.
So all of this, and to summarize this is just the beginning, and we are expecting that the volume and the value of digital transactions will grow many folds to about 7,000 trillion by 2025 as per the reports. So that was a brief background how we are in the fintech landscape today. Now, if I talk about the financial inclusion perspective, Rishabh, India is a very big country with massive population, and we need digital payment infrastructure which encourages transparency, accountability, and of course inclusion, which is the main goal as well. It has been noted that countries which prioritize digital payments, they also experience greatest gains in financial inclusion. Therefore, the barriers which are like, access to sources of credit, digital payment services, they are lowering the vast numbers of underbanked population as well as MSMEs. Organizations, across India, they are deploying technology as a growth enabler. Also, the rapid growth of fintech players has accelerated financial inclusion by new age technologies like AI, ML, as you were also mentioned in the beginning. However, still India needs better financial inclusion because the majority of the population still requires financial education, awareness, and stability.
Okay, I'm going to come and pick your brains because, you're doing this as an industry, but all of you guys are, have your own innovation that you're doing in these areas. I'm going to have the same question with Ravi ji in just a bit, talking about financial inclusion. But before that, let me get Mr. Rakkappan from Visa. Ramji, I was mentioning this in my introduction that when it comes to all the micro loan global models, literally the Nobel Prize winning models, they have indicated that when it comes to women, both as receivers of micro loans and in terms of setting up these micro industries, they drive financial inclusion the best. What is the gender revolution that is happening here?
Thank you, Rishabh. Hello, everyone. I agree with the first part of your question, which is women playing an important role in deepening the financial inclusion, but not so much on to the second part of the question where you characterized it as a revolution. I would rather say it as a revolution in the making. Now, there are multiple global models, starting from credit union based models, or model, or community banking, or even in India we have self-help groups, or village banking model, and so more. There are roughly 14 to 15 such models. So I'm not going to talk about what are those existing global models and what it means for India, because India has seen homegrown models developed here. But what I would like to talk about, just to continue from what Richa has, just alluded to, is about the financial inclusion part and the potential gender revolution in the making, if that's okay.
Absolutely. Please make your point.
Right. So when we talk about the financial inclusion here, one thing which we should keep in mind is also about the financial exclusion. And we also talk about, where we talk about some of minority groups, and when I call minority and talk about the vulnerable groups, including women. Financial inclusion is super important for a country like India, because it's not only strengthens the Indian economy, but specifically for women, it enhances them to spend not just on the production side, but also on the consumption side. It provides them more control over their incomes. It also, provides them an access to economic participation and also affordable financial products like credit, debit, banking and insurance, etc. But the problem that India has faced so far is not so much the availability of resources or the program, which in a case it is there, but there are certain societal problems which is tough to negate and to improve upon. Now, for example, simple case like legal restrictions or discriminatory behavior, laws that constrain, financial inclusion for women. As an example, you have unfavorable inheritance laws or tenuous property rights. So, unlike some of the few developing countries, you still have this discrimination. Son and daughters, they don't enjoy equal rights to inherit assets from their parents. The reason why I'm talking about this part is because when you go for credit, when you seek formal credit, you need asset to secure funding, right? So that needs to change. Second is the lack of physical access to financial institutions, right? Now, forget about the COVID in the past 1.5 years, it has made it worse, but the access is a big problem. And also for women, there is already a limitation to participate in the labor market, and that's an important challenge.
Right.
Now, I can cite multiple such challenges, but what India has done, and credit to the current government and the previous governments, is developing those pillars, strong pillars, especially creating a digital infrastructure, right, like Aadhaar, where it ensures there is an identity. And on top of it, allowing the private institutions to innovate, to come up with products, right? So, and I'm saying this is the revolution in the making, because now, as Richa pointed out, the fintechs can look at alternative credit assessment models. It can lead to, one can utilize blockchain and machine learning to help targeted outreach and so on and so forth. I'll probably come back. I mean, you can come back to me later.
Because that's in fact exactly, this is exactly what Perfios and the team that Govindarajan ji runs is doing, right? How does then Ravi ji help us, jump in on this? We talk about digital payments. I mean, from top to bottom, it is a revolution. It's already happened, right? It's not. It's here. It will grow, but the revolution part has happened. How does this drive financial inclusiveness? How do we reach the, Antodaya, as we say, the last person?
Great. Well, thank you very much again, Rishabh. Great to be here this evening along with my distinguished industry colleagues as part of the panel through NEWSX and ASSOCHAM. So to hear, great setup by both, Richa and Ramji, and the context that you set up, Rishabh. So there's no doubt that India is undergoing a tremendous financial revolution, right? And the digital payments landscape, as we, as some of the points that were brought out earlier, they have grown rapidly over the last decade. And digital payments have the potential to reshape and redefine the economic inclusion and drive equitable growth. Now, what happened, at the onset of the pandemic, and as we are living through the pandemic, what we have seen is that it has brought about and it has accelerated the need and expectation for financial services to be delivered in a 100% digital environment. Right? The lockdowns have forced people to conduct critical financial activities, banking functions, all of that, in a digital mode. In this past year, we saw low-value digital transactions kind of surging across India as consumers switched from cash or everyday purchases online and offline, between the health and safety concerns. And smaller cities and towns contributed 2/3 of e-commerce demand, right? So what we have seen is, as part of, all of the various, the fintechs, the banks, or the ecosystem players are all, it's that revolution in the making, evolution, all driving inclusion of consumers, inclusion of merchants. There is this convergence going on between the banks, telecom players, technology startups that is paving the path, for higher integration and innovation, right? Now, people today are owning more mobile devices, as we know, and through which financial services we can take to the last mile and connect with new offerings. Earlier reference being made to access to credit, right? So emerging technologies like AI, machine learning, Internet of Things, blockchain, that combined with ever-changing customer expectations and preferences are redefining how financial institutions are delivering, services. So now, from a Mastercard point of view, I'll just give you a couple of quick examples, because for us also we believe in the power of partnerships, and I think this is where working with across financial institutions, government, civil society, all other industry players is important. To come together to drive financial inclusion. And to your point on the example, there are examples like you look up for SMEs to go digital and provide operational efficiency, not just payment, but also their marketing, accounting, CRM. What are the needs for SMEs today? They want to get paid, they want to get credit, they want to get access to supply chains and markets, and they want to go and drive digital. So that is what the inclusion agenda is doing. There are e-KYC, video KYC now services that we are offering to help institutions underwrite businesses in a much faster way, right? Working on inputs for SMEs, like working with FMCGs on alternative credit scoring using non-traditional data. All of that is helping drive inclusion. I hope.
And Raviji, the pace at which it's happening now, I don't know whether it is accelerated, COVID accelerated, as you guys have been saying, because just about 2 years ago, even if you wanted to do a KYC for a digital payments wallet, right, you had to physically go to a location and enroll your fingerprints and this and that. And now you mentioned e-KYC, you can be sitting at home, you can hold your Aadhaar card on a video call and get it done. It's pretty amazing. So I'm going to come and pick, because this affects so many things. Farmers, you mentioned MSMEs. Govindarajan ji, Perfios. Now, for people watching the broadcast, being introduced to Perfios, you guys are providing these big data, sort of analytical solutions to firms who can then, come up with services. They don't have to spend 7-8 days manually trying to figure out whether, what's your credit score and what's your pending transaction. Can you guys give us an example of what kind of innovation are you doing? When we say machine learning, AI, we don't really understand it. What does it mean for you?
Sure. Thanks. It's great to be in this panel with other distinguished panelists. This is a great question, because people talk of all these buzzwords, right? AI, ML. I mean, in this program already we have listened to all the buzzwords. But at the end of it, what does it mean to actual customers? Is it really solving the problem, right? So to that extent, we position ourselves more as not a fintech as per the normal definitions. I would say we are more like a tech fin, essentially leveraging technology to service financial services companies, right? All the things that we talked about are exactly the technologies we use so that the financial services offerings are better. For example, we identify both good and bad customers, both at the time of onboarding and on an ongoing basis. And since our systems handle pretty much any kind of data, structured, unstructured, from different data sources, in real time, we are able to look for any kind of potential frauds. Whether it is frauds because of tampering of documents or behavioral frauds, we are able to kind of identify it in real time and immediately alert our customers who are lenders. And based on the experience of handling huge amount of data, we handle millions of transactions every month. We find roughly 2.5% to 3% of all transactions are potentially fraudulent.
Interesting.
It can be very large NPA. And so what we are able to do is identify these kind of potential bad customers and alert our lenders. Second thing, at the same time, we are able to highlight good customers. This kind of relate to what Ram was talking about. Like what we are able to see is, suppose I take an example of an SME, right? Ram was talking about unless they have this collaterals, unless they have this physical presence or whatever, they won't get access to the formal credit. What we are able to do with our solutions and some of the products we have deployed with our lending customers, SMEs with good cash flows, a strong order pipeline, or a relatively lower leverage, then lenders can look at that kind of insights we provide from these alternate sources of data and then prioritize lending to these credit-worthy borrowers
even if they cannot satisfy the conventional collateral requirements. They would have been written off otherwise. Whereas now, with these kind of insights that we are able to provide, leveraging this alternate data and in real time, we are able to identify these good customers and then bring them into what is now being called as financially inclusive society. So they were otherwise being written off, not able to get into the formal credit, but now they're able to get into the formal.
Okay, Govindarajan, you're saying real time. Now, what does real time actually mean? Okay, is it business days? Is it minutes? How does it work? And if somebody is interested and is looking for a loan, and they go to a particular financial service provider, and then you guys come in the back end, what does real time mean?
Say our solutions are truly real time, few seconds. You submit a bunch of documents in real time. We can real time meaning 3 seconds, 4 seconds, 5 seconds. The end product, the tag for the end product, I mean, we are integrated into a lot of use cases where it is completely straight through process, truly real time. You don't wait for any manual intervention. Obviously, in much larger ticket items, there could be some other kind of back office processing that is done by our lender customers. So even then, the actual decision making can be of the order of minutes. And what used to take weeks is now order of days or 1 or 2 days maximum. And a lot of the lower ticket items are truly real time, straight through processing.
Okay, so you're seeing that change happening, that loans are getting processed faster and default rates are improving. Are you seeing those case studies develop?
Absolutely. In fact, we are part of a large number of financial institutions in the country that are able to provide this. And another reason that is driving this financial inclusion is because of this leveraging of technology. The cost of going after these markets which would have been previously impossible is now possible. So whether it is smaller fintechs or even banks leveraging all of these products and solutions, they are able to offer this product at a much lower cost. So they are able to bring
if you lower cost, then you have then you can lower interest rate because the cost of the banks goes down in the same. I mean, you have two of the original fintech entrepreneurs, Visa and Mastercard, sitting here, right? And imagine what you can do with the ATM, or how effective it is for a bank and for you, and how that revolutionized the world. So let me bring Raviji back into this. Raviji, we can't really have an exhaustive conversation on financial inclusivity right now without addressing farmers at the bottom of the pyramid. So when we are saying fintech, what services are you seeing available already or soon to be available for farmers?
Sure, Rishabh. So, very, very critical component of the society. The agricultural sector undoubtedly plays a central role, and in fact now, as part of our COVID recovery, they are a very important sector, and the farmers face quite a few challenges: access to markets, information, inputs, financial services, expert advice. So they have to be enabled with solutions that help disperse subsidies, payments for produce, that is procurement of produce, crop loans, and loans against warehouse receipts, things of that nature, right? So access to credit and insurance for farmers is critical, right? And I think here that the advancements in agri-tech can help farmers and other related businesses boost their profits, and expanding them. We may also need to help them expand across the nation, right? So when I look at an innovative solution for farmers, let me give you a great example. In Andhra Pradesh, we piloted a program which called E-Raidu. Raidu means farmer, e-farmer in Telugu. Right. And as part of this farmers network, we created a digital marketplace that provides farmers an easy and secure way to directly access buyers, right, and discover the best price for their crops and receive digital payments via their feature phones. So we have, when we are designing solutions and we are talking about bringing farmers and financially included, we need to go beyond thinking only, from a smartphone environment to also a feature phone driven type of solution.
Interesting.
Because,
so how would that work? I mean, are you saying that an SMS would go out and you'll get the latest rates on something like that?
Because, correct, Rishabh. So, because of their small scale and the small leasehold farmers, they don't really have access, to a lot of markets, or they are limited to the kind of pricing that they are able to get, for whoever lands up at their doorstep, right, or where they're able to go. So through this kind of platform, what we have tried to do is create that digital ecosystem that digitizes the payments and workflows, and based on the transaction history, it allows the farmers to receive formal credit from banks.
So there you go. So once you have the data of how much they're selling, then then at the back end, people like Perfios can come in and say, listen, these guys are good to loans. Yeah, finish your thought, sir. Finish your thought.
Yeah. So to your point, I mean, absolutely. So you picked up. So that, you've got the farmer. I connect these farmer producer organizations, these FPOs, to the end buyer. So now here, when from a farmer producer organization can send out like, okay, need X quintals of let's say rice at this particular price point, different farmers can now go and be able to see, okay, this is what I can provide, and this is I know the rate I'm getting.
Yes.
And all of that helps transparency in the system, but also now we can leverage data to bring in other non-traditional partners, to now look at, say, how do you give better access to credit and help scale the farmers.
So, and if you can give better access to credit, you can give better access to insurance, and all these things then can be built on top of those kind of services. I want to pick your guys out because, Visa, Mastercard was, the rollout was for all those decades, getting that machine in a particular outlet or a shop. Now, those revolutions are also changing online. I want to pick your brains on that, but let's get back to this AI machine learning, which, I can pretend to understand, but I certainly don't. A part of that has to happen, Mr. Rakkappan, at the reverse end, because one big issue still remains, that when people are still hesitant to do digital transactions because they're, worried about some kind of fraud, some kind of these phishing activities are not just, the Nigerian prince, they've become more sophisticated, malware. How is technology going to help us, drive more trust in the system by looking at these things?
I think, Richa, you've raised a very important point, and especially for your viewers, because the cyber security is gaining more prominence every day, because we see that cyber attacks or cyber frauds gaining ground almost every day, not just within India, but across the globe, right? It's not just in terms of frequency, but also in terms of intensity, right? And we have seen that it's not just targeting citizens, it's targeting governments, it's targeting corporations. So your question is right. I mean, while we can talk about artificial intelligence, machine learning, and so on and so forth, we need to put in place systems and processes that ensure that the data that we have and the funds or the citizens' money are safeguarded by all means, right? So, just rewind back, 5 years ago, 2016, you've seen how in case of Bangladesh, the Bangladesh bank heist happened in 2016. That's targeted at the government. If you look at corporates every day, you see in news about some ransomware attack or a data breach incident or DDoS attack, corporate espionages, so on and so forth. But the real problem is also how consumers like you and me and the citizens are facing in terms of spoofing or phishing or frauds that I just highlighted. Because what happens is these miscreants or the fraudsters are now see that the bottom of the pyramid, it could be a 100 rupee or even 200 rupee sort of a fraud, some consumer clicking an SMS and then losing the money. Or you've seen some other, instead of buying instead of selling and receiving payment, they tend to send the payment and stuff, right?
Yeah.
So this is increasing, and therefore it's not just stopping, and we are already talking about crypto mining, malvertising, and so many other things. Now, the government has done a wonderful job, I would say, especially the Reserve Bank of India, to rein in the digital payments, the sort of security issues that's happening, has come up with the digital payment security controls, sort of guide framework, just in the interest of the consumers.
Right.
But broadly in the past, Rishabh, you would agree that when we talk about risk or cyber security, we talk about the three-line defense system, where you talk about the chairman or the board being the first line of defense, second is the compliance of the risk function as a second function, and third, the internal audit. Now, what is happening globally is also the development of the fourth pillar or fourth line, which is the external audit. Now, increasingly, Reserve Bank of India is becoming, more focused on some of these activities. Now,
when you say external audit, what do you mean? Is that external factors that are beyond financial institutions? Is that what you mean?
Yeah, so it is not about that. Now, Reserve Bank of India, for example, or similar regulators in other part of financial services are looking more closely about whether the processes put forth by the corporations are right, or do they need to make any changes?
Yeah, and, so that is happening proactively, because now it's become two-factor authentication. We live in an OTP economy now. We've all accepted it. But there is a problem of what happens when somebody sends you an SMS from HDFC Bank, okay, and says, oh, your credit card has a problem, please call this number immediately to help us verify. And then it's a phishing expedition. If you send 200 of this SMS to you, two people call you, and the transaction is not a problem there, because the bank is authenticating a transaction you're doing, but a human being is scamming you. How do we figure that out? Mr. Govindarajan wants to make an interjection. Go ahead, sir.
Yeah, so this is a very interesting question, and as I mentioned earlier, we leverage exactly these technologies, the AI, the ML, NLP, because of the huge amount of data that we have. Essentially, what we do is we build these models, and then when somebody is, let's say, applying for a loan, and then in real time, by mapping with this model and then analyzing whatever data that they are submitting, we are able to figure out whether they are suspicious transactions. For example, as I said, people fudge any kind of stuff. They tamper the document. They insert line items into these documents to make them feel that they have greater cash flow and stuff like that. So what we are able to do is, by leveraging these algorithms and the humongous amount of data that is there collecting on a daily basis, we are able to, in real time, identify these fraudsters and then immediately flag it.
Okay, but that's on the reverse end, Mr. Govindarajan. That's, of course, the people who are applying for loans and want to defraud financial institutions. What if I flip it around for when consumers, are being the target of phishing expeditions? So can we then develop a system, or, can it be done in a centralized fashion, that the SMSs in this country which are reported, we create an inventory and we know that, okay, these are the dodgy links that are coming out these days. This is the latest phishing scam.
Blacklisting or whitelisting, whatever you call it.
Yeah, which is happening, right? I mean, the RBI is in the process of doing exactly that right now, roughly. Okay, so
RBI in cooperation with the TRAI, Telecom Regulatory Authority, they already. But I'll just give you 5-10 seconds. I'll just
go ahead.
In Visa, we believe in devalue of data. Now, I understand your question is about consumer, but although when consumers are now, doing purchase online, you see that sometimes, you see that some cyber attack at a merchant, and your card number details are out in the darknet and stuff, right? So Visa, we believe in devaluing data. We have solutions like card on file tokenization, right?
Interesting.
Which is the need of the hour, which essentially converts the 16-digit card number into a 16-digit token number.
Interesting.
Even if in case of some cyber attack or hacking, it's of no value to the fraudsters, right? So we are working with the Reserve Bank of India, and the regulator is quite understand the problem.
So that of course is securing your infrastructure from cyber attack, and then they're securing down to the last consumer. Fascinating. Let me then just take it down into slightly more specifics for viewers watching the broadcast. So Richa ji, now PayU. Now, for people watching the broadcast, PayU is one of the the largest global online payment facilitators. So if you want to set up an online store, for example, and you need somebody to host your transactions, whether you're doing the transaction via UPI or Visa or Mastercard, PayU will host it for you. And that is a revolution also happening as we speak here in India. So ma'am, can you help us understand what does that mean, an online transaction merchant space, and how is that evolving?
Sure. So Rishabh, PayU, as you rightly mentioned, it is also the FinTech arm of Process. It's a leading financial service provider in global markets across Asia, Europe, America, etc. So what we are doing is we are using our innovative technology, which we develop either in-house or as through investments and strategic partnerships. We empower millions of merchants to buy and sell online, extending the reach of financial services. We are regulated under RBI, and we offer advanced solutions to allow allow our businesses to accept, process, and disburse payments with its comprehensive product suite. When I say PayU payments, it actually has two verticals underneath it, which is the pure payments offering, which is under PayU payments, and also the alternate lending, which I mentioned earlier as buy now, pay later products.
Okay.
So we essentially provide one-stop solution for all the online, offline, international payment needs of the merchants, and there is a whole gamut of payment bouquet that we offer to our merchants.
Okay, and
customers.
I'm assuming that this is consumer facing as well and not just B2B. So this consumer facing, somebody can go to a website and then you will conduct the transaction for them. Is that correct?
It is essentially B2B2C.
Okay, I see. And how is this? Yeah, finish your thought, ma'am.
Yeah, and just how we are actually democratizing the payment, as your question was, it is owing to that we have large merchants across the different verticals. You're processing massive amount of transactions per day, about 3 million per day. And most importantly, we are RBI compliant, we are PSCI DSS certified, which is the highest encryption and security standard. We comply with data localization norms. So it is all complying to the local laws and regulations. And the most important part in the fintech and payment space, I would say, is the consistent uptime of 99.998% for last couple of years. And I think that is all what it makes PayU as go-to-market partner for the organization's payment needs.
Okay, now that's of course the core service that you guys provide, but I know that the company both here and abroad is investing in acquisitions and people who are doing the tech innovation, which is going to drive the next generation of what you guys do. What are the great ideas you guys are spotting out there?
Sure, Rishabh, this is a very frequent question that is asked of us, and I would say that a very key element in PayU's growth strategy is empowering the disruptive fintech entrepreneurs through early stage investments. I would say this is also by supporting the businesses that complements our existing portfolio, and by wherein we can develop an entire fintech ecosystem which meet the financial services needs of millions of customers. So say at PayU, we, apart from the full suite of payment offerings, we are also orchestrating a full fintech ecosystem, which involves enabling merchants, consumers, banks, and fulfilling wide range of financial needs in one experience. And so that, as I earlier mentioned, it covers both the payments as well as BNPL. I would also take 30 seconds more. By a parent company, which is Process, it is essentially a consumer internet group. So it comprises business in high growth sectors across the verticals, whether in payments, food delivery, online classifieds. So those are the innovation that we are seeing, not just in fintech, but across the verticals.
Interesting. And just for, if you're watching this, and I'm sure you've experienced it, it started with the credit card, then the debit card, then it became cash on delivery, and today digital wallets and UPI. I mean, today if you want to make a payment, you have so many options for instant payment. But okay, Mr. Rakkappan, we also need to discuss, what are the challenges out there. But before I discuss the challenges, since Richa ji was mentioning, what is the innovation you're seeing? Because the players that you guys represent, PayU is also a massive international firm. Visa and Mastercard, everybody know, they're ubiquitous in all our lives. There is so much collaborative knowledge pool that is available globally. How much of that is coming into India, and what can we utilize to supercharge what's happening here?
That's a good question. I think it also depends on whether the country is receptive to those innovative technologies. And we have, India is definitely has a thriving fintech ecosystem as a sort of an innovative pool in itself. But the good news is also that they're quite open to test and to allow certain innovations that are available outside India. Now, a couple of examples around the contactless, for example. Contactless payment has seen quite a huge success in India, and especially during the pandemic. If you see, the very fact that you just have to tap and pay, and you don't need to give the card to a fuel a person or even to a retailer, and it enhances your security. So that is a technology. Second is, right now we are talking about the digital currencies. We are talking about stable coins and many other things, right? There are blockchain-based payment technologies which are currently under work, and the good news is not just the government, which is of course supportive, and Reserve Bank has set up the innovation hub as well, which is looking at developing central bank digital currency. Right, there is a huge opportunity to learn from the experiments that's happening elsewhere. That's one area, but more on the security side, as I briefly spoke about tokenization or the card-and-file tokenization, we need to focus on innovations in securing the ecosystem, because because trust is a basic factor in finance, especially in payments. As long as if people are moving into using the digital payments, we have to ensure that the channel that whatever they use is completely secure. That's why more and more innovations are happening, and Visa is very much invested in be it a 3D secure model or tokenization, as I just mentioned, or even supporting the regulatory sandboxes, not just within India and across the globe. Now, one other sort of a technology that you could also talk about is the biometric authentication, right? Right. You will soon see revolution happening in the way it's been authenticated. These are some of the areas, especially limited to the payments, but more and more to come.
Yeah, because biometric, like the two-factor authentication. Now you have fingerprint scanners in new mobile phones that are emerging. And you mentioned the token system. For people watching this, that's something similar to which governments are learning. For example, we're trying to shift Aadhaar into a token system. So if ever there is a data breach, the data that actually gets leaked is meaningless. Because all you get is a list of tokens. You actually don't get the numbers or Aadhaar numbers or credit card numbers. But you mentioned pay to touch logic of cards, so they don't have to swipe them. A physical recording is not maintained, etc. In that sense, Ravi ji, how we talk about these technologies from the user point of view, but from the person who is the business, at the level of the Kirana store. How is this then impacting them? How is this revolutionary that is becoming for those small transaction, 100 rupees, 200 rupees, it's changing the paradigm of things?
Sure, Rishabh. So, very important segment, undoubtedly, right? Because I think if the estimates are correct, there are roughly over 15 million or so Kirana stores. 90% of food and grocery shopping still takes place through these stores. Yeah. The micro merchants account for like 92% of the retail market, right, in India. And so that transition to digital payment certainly is a significant opportunity to further the financial inclusion and the inclusiveness agenda, that is core to this topic of discussion. Because MSMEs in general, right, because the Union Minister for MSME has outlined that plan to increase that sector's GDP to 50% from the current 29% as India works towards the $5 trillion economy target, right? Now, these small merchants, so everybody had to, it's interesting, I come back to COVID, it was a great, you could say, everybody had to adapt, right? Because you had consumers adapting to and adopting rather digital. You had small merchants who also learned during the pandemic that going digital was their lifeline, to sustain. And so you had, your local pharmacies, milkmen, vegetable vendors. They all emerged as true warriors during the COVID to ensuring that supply of essential commodities and so forth. Now, so this digital transformation, in the context of Kirana, it's enabling fintech companies to tap into the digital, you could say, trail of merchants. When you look at different parameters, customer rating, reviews, purchase history, other factors, all of those, many factors are going towards making buying credit decisions. And leveraging and tapping.
So Ravi ji, then let me ask you that, the follow-up question on this, because, Mastercard and Visa, you guys are the originals who went, down the beaten path physically over a phone line or over an internet connection. Millions and millions of people had those access points, the transaction points that you guys created that ecosystem. How are you seeing that ecosystem evolve now? What is that next phase where you covered a particular set, but you see that connectivity needs to be provided to every Kirana store. How do you see that developing? Is it still going to be a machine-led, card-led? Is it going to be mobile phone-led? How do you see this evolving?
I think that's very interesting, because I think that one of the things is that the notion of ownership is undergoing, I'm going to give a context, that notion of ownership is undergoing a shift in today's world, right?
Yeah.
Because let's take it, consumers are, no longer owning the music that they listen to. Ride sharing has ensured that car ownership is no longer essential for mobility, right? So it's the sharing economy underpinned by technologies of the Internet of Things that have made it possible to bridge that ownership divide and bring products and services to individuals in smaller shared packets as and when they are needed, right? So bridging that digital divide is essential towards financial inclusion.
It's mostly
right?
not about can it happen. Now this is a must happen, right? And like I said, the models which you guys have brought forth, I mentioned 800 million debit cards. That was the first thing, and now that needs to transit here. Ramji, I'm just coming to you in a second. Let me just get in Mr. Govindarajan. Mr. Govindarajan, we are talking about AI, we're talking about tech, ML, and once all our devices get connected to IoT. How much of this then becomes industry standards now? Ramji just mentioned a token. Now, these are various ways of evolution going on. Do you see the rapid, prototyping to becoming industry standard happening faster, or is it still a complicated process?
No, it's already happening. So, for example, we pioneered the account aggregation in India and continue to be the dominant player, right? Where we aggregate data from multiple sources, providing real-time decisioning. The new account aggregation initiative that is driven by RBI is nothing but a standardization of all these activities.
Right.
We ensure that the friction in acquiring data from end users goes away, while at the same time, citizens' data is completely protected through the PDP and related privacy bills, right? So AI is now a standard. I mean, whether we like it or not, every industry, not just the financial services industry, but every other industry is going to be using some amount of account aggregation.
For example, like the OTP has now become, some sort of an agreed standard. Ramji mentioned biometrics is coming, and now for, some of the smartphones, biometric opening of the apps has become standardized. Most of the bank apps now open through biometrics as well. So how fast do you see this evolving, sir?
So AI is already there, right? In the sense that there are quite a few banks that have started using it. So we feel that in the next 12 to 18 months, you will see this as getting into mainstream.
Okay.
And this is the primary mechanism by which data is going to be.
Okay, so you mentioned already, and several people have, how the RBI is embracing this innovation through, dedicatedly looking at it, not waiting for it to happen, but looking at it. What is the role that the RBI can play here, Mr. Govindarajan?
RBI, it's a great follow-up to the earlier question, because RBI has been driving this whole account aggregation initiative. And Rabbit, which is a tech arm for it, is defining the specifications for this, closely interacting with people like us in ensuring that the industry input is obtained so that the specifications are constantly refined. So it's already active, and they are the primary drivers of this standard. In addition to that, if I take lending as another example, they are already working on some of this digital lending working group to ensure that there are no frauds that are being committed by various spurious players and all that. So to a large extent, RBI has been very, very proactive in this space.
Okay, so let me ask Mr. Rakkappan. Mr. Rakkappan, what are the challenges for governments, for regulators that need to be addressed and are within the scope? We've already talked about security. What else do you see?
Oh, before addressing this question, let me just 2 points. I mean, one about you mentioned about Visa, Mastercard being card, and how do we see, right? So as Ravi just mentioned, what we are also seeing is a blurring of lines between online and offline, right?
Yeah.
And Visa, we have adopted a network strategy. What it essentially means, you can the transaction can originate anywhere. It can be on a card, it can be on a bank account, it can be on a UPI, anything. So, but we are working on that interoperability to ensure that there is a seamless sort of a transaction experience. And Visa, neither Visa nor Mastercard is just a card company. We are a payment technology company. And second, to your other question about biometric, of course, some of these technologies require approval, explicit approval from RBI, and which in any case we are working on it. And the question, to answer your question about the challenges for the government and the regulator, I think there are a few. One is, how do we deepen the digital payments in the country? How do we expand acceptance infrastructure, right? As you know, for card payments, you need to have, traditionally you need to have a physical point of sale machines. Now you have, software point of sale as well. So expanding that acceptance terminal is a challenge. But the good news is RBI also has come up with a solution, which is come up a dedicated fund to expand, these acceptance terminals throughout India.
Yeah, let me come and pick on that, because this is very interesting for our viewers watching this, because every time you go out there and you see a QR code, somebody has to come out with a standard and has to expand this beyond, Delhi, Mumbai and Bengaluru. And there are lots of FinTech development funds that are, being piloted by government. I'm going to come and pick your brain on that in just a second. But just on this issue, Richa ji, digital payments, as Ramji mentioned, is not about holding just card companies. In the end, the line is already blurred. What is the innovation still needs to happen? And within this, where do you see regulatory measures catching up? Because we've discussed that we want to do innovation, but we also want to safeguard security. All of this adds up. Where do you see this going? What are the challenges here?
Richa, in terms of the innovation space, it is very essential to understand the challenges that exist in the FinTech ecosystem. Some of the challenges, and only when we know the challenges, we can address the gaps and plug in the gaps. So first, most importantly, is the digital divide. Large proportion of our Indian population, they do not know how to use digital products. I think just the last week only, I was reading the internet penetration is only 50% till now. So you can imagine the scale that we need to ramp up in terms of bridging that gap in terms of digital divide, because the digital exclusion also leads to financial exclusion. Digital exclusion also leads to financial exclusion, so that is number one, I would say. And as a result of that, we need to promote our digital literacy programs. RBI and the government, they are doing a good job at it, but we still need
so digital literacy, but I think the challenge there lies that if once you've saturated the markets, places where I'm sitting right now, and you can't do inclusion unless you go to the villages of India. We talk about tier 1, tier 2, but the people of India still live in our villages, at least 60% of them. So then Ravi ji, this creation of this infrastructure, the creation of standards, before I come to the specifics on the funds that Ramji mentioned, how do we take a step forward there?
Sure, Rishabh ji. So I think, I'll point to something very recent white paper that only in August from the World Economic Forum on kind of principles around an inclusive financial system, right? Because that's something that we worked on with them. But and these are like core 7 principles that I would offer that should inform, the financial products, services design, enabling technology design, infrastructure planning, design, the standard, and some of it also captures what Ram and Richa mentioned. So I would go by, it should be inclusive by design, right? Because these systems should be inclusive, reaching the maximum number of people and businesses with mainstream financial services, right? And embedding, inclusion in the design of policies, regulations, products, security procedures, infrastructure. It should be an integrated system, which means it provides the user with an integrated financial services experience and through interoperable products. So interoperability is important.
Yes,
it should be digitally led, so that we can expand digital access as a channel, right? It should be economically sustainable and commercially viable. Because many times what happens is that as we develop services, solutions, we forget the fact that these need to be economically sustainable and commercially viable. They should be informed by data, because the data by maintaining the security of data in a responsible way, right, and be informed by data and trusted.
So let me just pick on those points as you've said them, that it should be led digitally. That's an obvious. Interoperability, it should be financially viable, because otherwise it doesn't make sense. It should be informed by data and therefore trusted. And that definition covers our panel tonight, because you could be making a transaction using a card or of a Mastercard or a Visa via a payment gateway that PayU runs, which has a backend that Perfios is running. So interoperability. But for viewers watching out there, something that don't often come in television conversations, but are really fundamental to how this will roll out. Now, Mr. Rakkappan, we're talking about financial inclusiveness, tier 3, tier 4, okay. Now, for viewers watching this, there's something called the Acceptance Development Fund, there is the Payments Infra Development Fund, and there is something called Bharat QR. Now, these are already in operation. What are these, sir? Why do they help, and how can we chivi them along?
Okay, Bharat QR, it is probably India's first sort of a collaborative industry-led product, where the networks, including Visa, Mastercard, NPCI, join hands together to develop this QR payment system, which was originally part of Visa. So what it ensures, as you know, QR is these days you do make payments via mobile phone, and it's easy to use, and the QR technology is developing, and you already have 2 interoperable QRs in the market. One is Bharat QR, as I mentioned, and the other one is UPI QR. Right now, the work is in progress to develop Bharat QR 2.0, and it is timely because September, this is 5th year of Bharat QR, and we need to really look at ramping up this Bharat QR 2.0. And to the other question about the Infrastructure Development Fund, one of the important milestones that RBI has done is to set up this in Payment Infrastructure Development Fund with an earmarked fund of approximately 500 crores as a one-time payment, plus recurring payments from the industry. So some of the networks, like including Visa, Mastercard, and NPCI, and almost all the networks, all the banks are contributing to this network. So essentially, to ensure that in tier 5, 6, and also northeastern states, you have the opportunity for people to make digital payments. And why it is important is because even today, cash is king, right? So, and we can go into a debate as to why it is important to reduce the cash circulation, right? But essentially, this will lead. This will be part of the growth engine of India. So it is important that we focus on this and develop this acceptance infrastructure.
Okay, how would a 2.0 be different or better? How would that affect me and make my transactions easier? Because I go take my mobile phone, I scan a QR code, which is what I'm assuming we're talking about. What more can be integrated into that you see?
Exactly. So it will be a back-end, sort of a technology development. Right now, in fact, RBI has set up a couple of committees which has just started working on it. And what you should know at this, or the viewers should know at this stage, it's going to increase the convenience more in terms of the payments, and also more secure features.
Okay, you make it more convenient, you make it safer, and you automatically encourage uptake. That's the logic. If the QR code becomes ubiquitous, it already has in many areas, but you specially mentioned that how the industry is contributing to this front. All the big players like you guys are contributing to make sure that the rollout happens in the places where it hasn't happened, including the Northeast. Okay, we're running short of time, so let me take some larger viewpoints as we ram up, because always it's good to have a conversation that is action oriented. Mr. Govindarajan, where do you see this going, and what takes us there? What are your few, 1, 2, 3 points that you would like to see that, okay, these are actionable that we need to quickly jump on?
So purely from a financial inclusion perspective, our vision is that small borrowers whose only collateral is their data should get the same respect and treatment from lenders as large borrowers with huge balance sheets. I mean, this is easily said than done, but a combination of technology, policies, ecosystem evolution, like open systems like account aggregation, PDP bill, or leveraging technologies like ML, NLP, all this that can handle data and scale, all of them are making this vision to be realized. And this is work in progress. And this will drive the whole financial inclusion to a large extent.
Okay, whose only asset is their data. Fascinating concept. I'd love to have an entire conversation on that, on how data can become an asset, not just to a big social media players, but to empower and drive people. Okay, Ravi ji, keeping this in mind, since our focus at the top was, and let's end it there also, at the bottom of the pyramid, sir, what is the opportunity that you're seeing out there as industry innovators in getting millions and millions of people and millions of businesses on board this train?
Sure, Rishabh. So, certainly, I think that the effective regulation, which certainly I think the RBI is playing a major role in enabling innovation, competition. Those are all very important. And I think in India, by virtue of areas called out earlier, you look at the JAM Trinity, Jan Dhan, Aadhaar, Mobile. People have you have tremendous access to account. Now, what we need to drive is usage, right? Because only when you have usage combined with access are people truly, included, right? Yeah. And I think that in terms of we need to see kind of digital lending evolve further, right? Because look at mobile-based lending, supply chain financing, crowdfunding, POS lending, invoice financing. So there are areas that need to continue to evolve to reduce the friction in the system, help small businesses, especially the base of the pyramid, get bring in fintech players, non-traditional models, different ways of lending and different scoring methods, right? Getting NBFCs, into to be able to do more. To provide these non-traditional financial service providers. We need to bring them more and expand the base of pyramid there.
Okay, interesting. And that, of course, helps businesses, and businesses in turn then reach out to you and the consumer. Richa ji, I'll leave the last word on this very, very interesting conversation with you, because, what is the vision out there that, you'd like to see, regulators in policy and with, that should also drive through this concept, gender empowerment?
Yes, Rishabh, it's very relevant. And I'll just quote one thing that as per the new Financial Inclusion Index, India is only halfway mark. So gender inclusion is still a very far cry. In the interest of time, I'll say a couple of points here. We need a paradigm shift in the thought process, behavior, and mostly empowering women at all levels, which should see the full executive sponsorship of each and every organization. So that is very critical, that for the organizations today, not only to empower, but also to provide mentoring, diversity and inclusivity opportunities to the women workforce. And at PayU, we are driving this at a very successful rate.
Well, for all of you watching this broadcast out there, your life has revolutionized in the toughest of times in ways that we now take for granted. The digital payment is now taken for granted. Its safety and security is taken for granted. This entire OTP infrastructure, which imagine all the banks, telecom guys all coming together to develop that system for you, is being taken for granted. And the millions of people that have come on board, all this, 6 lakh crores in transactions in just UPI in a month, okay, and it's increasing, it doubling at exponential rates. All of this is fascinating. These are the people and the teams behind them that are doing the innovation. There are so many more out there. It's been a fascinating conversation. I'm glad we had the chance to have it, and we should have it more often, because the root of all of this, all the solutions are right here. You connect people to these ubiquitous ecosystems, and they know better how to leverage them. Okay, you can't have a top-down approach. It is the bottom of the pyramid approach. The end user knows what they find most convenient, what is working, what doesn't work, what they trust, what they don't trust, and what they need to use it for. And all these technologies are going to drive that change. And it's good to see it happening in a rigorous environment. My thanks to all of you for having this fascinating conversation. We take a break. See you in a minute.
For more such videos, subscribe to the NewsX YouTube channel, hit the bell icon.